Greetings, everyone. This is Richard Crevo with the chart reading session for Tuesday. This is May the 26th. And as I mentioned in previous YouTubes that I've done here, I plan on doing this chart drill down once a week or so. For those of you who are interested and want to get a feel for how I like to go about analyzing the charts each day as I look for trading setups. And in this video, that's what we're going to be doing. Now, if you have any questions about how and why my charts are set up the way they are, please feel free to reference the video entitled Chart Tutorial, which was posted on May the 11th. Now, we'll try to get through as many of the 28 pairs that I follow as time permits. We've never done it once. We haven't even come close so far, so it'll be kind of a goal for us to shoot at. And as I mentioned in previous videos, if you have any questions, feel free to email me at rkrivofx, @gmail.com. Let's get the disclaimers out of the way. Even though you may have heard these before, please pay attention to them. Trading at foreign exchange involves significant levels of risk and may not be suitable for all investors. You should be trading only with risk capital, and that's defined as money that you can afford to lose, and it's not going to affect you one tiny little bit. There's no guarantee made or implied that any trade analysis covered in this or any other video will result in profits or not result in losses, and I can no way guarantee that any of the setups that you see in this video will result in a winning trade. This content is provided strictly for informational and educational purposes only. It's not intended as specific trading recommendations. I am all about teaching you how to trade so that you don't have to rely on anyone else as you continue your trading journey. Now, under that heading of teaching, I just want to mention that some of you might know this. I do offer one-on-one trading sessions done, live and over the internet. And if you want to learn more about that, feel free to email me at rkrivofx@gmail.com and just put one-on-one in the subject line, and I'll be sure to get back to you. Now, remember, as we go forward in this exercise, keep in mind that these are trading setups, and a setup is just that. It's nothing more, nothing less, just a setup. It may or may not trigger, and if it does trigger, it may or may not produce a winning trade. These setups put the probabilities of trading in our favor, having a winning trade more in our favor, but the setup and its execution by no means assures any type of a winning trade. Now let's start looking at some charts here. And a couple times people have asked me, they say, okay, how do I go about deciding what charts I'm going to look at? Well, what I try to do for my own personal trading when I'm not under the constraints of 15 minutes from Screencast-O-Matic here, I look at all 28 pairs. But something else that I do, which some of you might be familiar with, I do a strong weak currency analysis, and that helps point me in the directions of some higher probability trades. Now, if you want to know more about that strong weak currency analysis, once again, email me rkrivofx@gmail.com. Put strong weak analysis in the subject line there. Now, when I did the strong weak analysis just before I started to set up this video this evening, the pound was the strongest currency out there. Pound was the strongest currency across the board using the 4-hour chart with the 200 period moving average. Pound was the strongest. New Zealand dollar was the weakest. So what that tells me is, let me take a look at the pound New Zealand chart to see where potential places to set price alarms. So when those price alarms go off, I can see if I want to get in the trade or not based on what I'm seeing on the charts. So if I look at the pound New Zealand on my chart array here, I've got a weekly chart here, a daily, 4-hour, and a 1-hour. And I can see that price action has on the weekly chart made a new high right here. So we're looking only for buying opportunities based on the weekly chart. We've got good angle and separation here on slow stochastics. And we can see also that on the daily chart, price action took out the previous high, has been doing so for quite some time. Bottom line, what this tells me is I'm only looking for buying opportunities because that's the higher probability trade. I'd be trading it, this particular pair, the pound New Zealand, in the direction that the market is taking the pair. That's what I'm looking to do. And on the 4-hour chart, I can see right here at that previous upper Donchian channel at about 2.1483. That's where I'd be setting a price alarm. to take a look and see what's going on at the pair at that point. If I want to get a little more aggressive in my trade, I can go down to the 1-hour chart and set a price alarm at 2.1310 and see what price action looks like on the charts at that point. I notice I've got a couple of charts where strong angle and separation to the upside, strong angle and separation to the upside, and here we're already over 80 on slow stochastics on the 1-hour chart, indicating that, again, the direction I want to be trading this pair is to the upside. And if I take a look, let me enlarge this 1-hour chart here, and here's where that previous high here is, right at the upper Donchian channel, 2.1310, where I'd set my price alarm. I can see if the alarm goes off and all things are looking the way I want them to be, I've got a little bit of room to run here. I always like to see how much room price action has to move. I don't want to get in a situation where all of a sudden I get in and 10 pips later I got a roadblock in front of me. Well, this one, before it hits any sort of, on the 1-hour chart, before it hits any sort of resistance at all, is about 102 pips away. If it goes up to the previous high, it's about 177 pips of room to run. So that would be a trade that I would be looking at. Another to set a price alarm on, as I mentioned. Another one, as I said, pound is strong across the board, and the yen is the next weakest currency there. So let's take a look at the pound yen chart. Similar thing on the daily chart, or excuse me, the weekly chart. It's taken out the upper channel line. We've definitely taken out the upper channel line here and continued to do so. And based on the 4-hour chart, I'd be looking at maybe 190.01, around in that area for a price alarm. And here we'd be 189.70, and we've got 190.01 right up here. So I'd be looking at those areas on that particular pair. Let's take a look at New Zealand USD, because the dollar is the second strongest currency that's out there based on my analysis on the strong week. And the New Zealand dollar obviously is the weakest we mentioned. Let's take a look at the New Zealand USD charts and see what that's telling us. Of course, that's going to be going in the opposite direction. Here we see that on the weekly chart, definitely, no question about it, moving to the downside, has moved to the downside, and price action has taken out the lower channel on the 1-hour and has taken out the lower channel on the 4-hour chart. Now, what a trader could do, and I'll just use the 4-hour chart for an example here, is, okay, price action already broke through. I don't want to get in this trade after, you know, the train has kind of left the station here already, and I missed it in this particular scenario. So what happens sometimes is price action, after it breaks through, it potentially can retrace. So what a trader might do in this situation is set a price alarm should price come back up to retest, you know, old resistance is previous support and that type of thing. So if price action moves up and tests what was old support and is now new resistance, roughly at about 72.83, you can set that price alarm and then check the situation to see what the charts look like at that particular level. That doesn't happen all the time, but it happens often enough for me to make mention of it on that New Zealand US dollar trade. Let's look at, let's see another pair here. Let's look at the pound Canadian and see what those particular charts are telling us here. There we go, pound Canadian. Okay, here, price action has taken out the upper Donchian channel. It's retraced quite a bit, but it hasn't touched that lower channel. We also see that slow stochastics is kind of wound up here and rolled over back to the upside where we've got some angle and separation. And that's because price action has been moving up over the last several weeks. So that's what's going to cause slow stochastics to roll to the upside. So we've got a situation here where price action again moving to the upside. We've got the pound, as I said, which is strong across the board. The Canadian dollar is the weakest, the third weakest currency out there after the New Zealand dollar and the Japanese yen. And what I'd be looking for here, what I'd like to see on the 4-hour chart for a price alarm is right at about 1.9185. right at that level because that's where it would take out the upper channel. I'd like to see more of a full pullback here. As most of you know, I like to see a situation where price moves down, touches the lower channel on whatever time frame I'm looking at, then moves back up, takes out the upper channel. We have a good example of it right here. It's kind of taken out that upper channel at 1.9126, but here we have a match between what do we have? Let me get that lined up for you there. 1.9187, and this is going to be the same, roughly right there within a few pips, 1.9185. So on the 1 hour chart or on the 4 hour chart, I'd be monitoring for price alarm that 1.9187 level, just to take a look and see what's going on. Now, if I want to see if it's got enough room to run, because I like to check that out on the daily charts. And the upper channel, or excuse me, the upper extremity there is 1.9186 right there. If we set our price alarm there, this would be the same price, except it's on the weekly channel. We looked at it on the 4 hour and the 1 hour, and checking out room to run, if the price alarm is at that level and it goes up to not the previous high, but just the high of those last candles where we had price close, we've got roughly 141 pips. If it continues up to the prior high, we've got roughly 370 pips. So in my book, that qualifies as room to run. With this particular type of trading strategy, what I like to look at is at least 100 pips of room to move. Okay, let's take a look at just a couple of the more widely traded pairs. We've got a few minutes left here to see what's going on. Euro USD being the most widely traded pair. Price is definitely in a downtrend on the weekly chart. We had a nice pullback here, didn't touch the upper channel. So we're still in an open sell situation, and I'd be looking for selling opportunities on the lower time frame charts. Now I can see that price action has just about taken out that lower channel at 1.0844 at that point, but on the lower time frame charts, the 4 hour and the 1 hour, again, things have pretty well materialized to the downside already. So I'd be waiting for a pullback before I would consider getting into the Euro USD short. And again, based on what I'm seeing on the longer term charts, I'm only looking for shorting opportunities because these charts are telling me the pair is in an open sell situation. I want to trade the pair in the direction that the market's taking the pair because, again, that's going to be the higher probability trade. It's kind of like running with the wind at your back. If you've got the market pushing behind your trade, you've got a greater chance of success. Just like in running, if you're running into the wind, you might not be breaking any records. But if you're running with the wind at your back, you might break a record or two. And this is what I'm looking for. The wind is at my back if I'm interested in shorting this particular pair. Let's look at the dollar yen. Again, a widely traded pair. This pair really took off to the upside earlier today. We've got a little, again, so I'm only looking for buying opportunities on this particular pair. On the 1 hour chart, there was a modest pullback, not much. In my book, I'd like to see more of a pullback. I see a little bit of divergence here. Let me, okay, the pair made a high right here. It didn't make the same high yet, but we've got a little negative slope here, negative divergence. What that can potentially mean, nothing is guaranteed in trading, but that can potentially mean that the pair is due for a bit of a pullback. I wouldn't be surprised because of the way it went this morning. It was kind of off to the races a little bit. And if we look at, let's put a fib line on here. Okay, we've got, just as this is on the 1 hour chart, and you can see there hasn't been much of a pullback at all from this run up. Here's the 38.2 extension, not extension, I mean fib level. Here's the 50% level. Here's the 618. Here's the 786. Ideally, I'd like to see a pullback before I'd get back into the trade long of the pair, getting in between the 50% pullback and the 61.8% pullback. Okay, we're very much at the end of our time here. We've got about 15 seconds left. I'm going to use that time to say thanks for listening to this and look forward to talking to you again soon. Bye now.